What's good, guys? Your boy AJ from AP Trades, and welcome to another video. Today, we're going to be talking about exactly how I made $1,000 over the past 7 days. So simply, I'm just going to show you guys my strategy, what I kind of look for, and some opportunities that I took in the markets and things like that. And so that way you can kind of see how I executed them. And hopefully, by seeing these things, it'll help you, with your trading. I try to make trading very simple. Like, I used to overcomplicate it. I used to trade forex, and I didn't like it. Like, it just wasn't for me. No knock on forex at all, but just, I don't know, just wasn't for me. You know. But trading stock options has been the best thing for me. I've loved it. Absolutely loved it. So yeah, let's just get into this video. Kind of go through some plays that I took this week. So simply, what I'm looking for when I'm trading, the main thing that I'm looking for are fair value gaps, right? That is the number one thing that I'm looking for when I'm trading. Outside of that, I'm looking for inversion fair value gap. So a fair value gap is, there's one right here. I'm going to find one, and I find a good one. Let me erase all this. I'm going to find a good one and show you guys here. Let's come down to like the hour time frame, right? All right, they're kind of everywhere. I want to make sure I find a good one. Let me see here. Okay, let me see. I'll come down to the 3-minute time frame because that's where I trade off of. All right, so now you're gonna see these fair value gaps everywhere, but you got to be very careful which fair value gaps you choose, what areas, because price will sweep through highs, and it just comes with market experience to kind of just understand some of these other things. But simply explaining, like, the main thing that I look for is I look for these fair value gaps. So there's one right here, right? There's a fair value gap right here, right? Now, why is this a fair value gap? Why is this a fair value gap, right? Because we have, now let's do this here. 1, 2. Oh no. I need you on top, buddy. All right, we'll put you aside. 2 and 3. Right? You can't see the 1 either, so I'll put this one aside. Let's not waste our time. Right? All right. Do we see that? 1, 2, 3 candles. Right? So in between the first candle, which is this one right here, and the third candle, there's a space. Okay, between the wicks, right? There's a wick here, wick there, off of that candle, right? So the space in between those two candles is the gap, right? You have this number 2 candle, which is the big candle, right? The gap is in between 1 and 3. Okay, I'm gonna re-explain that. All right, so now that we have these numbers up here, right? We have 1, 2, and 3, right? This is a bullish fair value gap, right? We have a big gap left here between candle 1 and candle 3. It's a gap because these two wicks do not touch, right? There's space in between these two. Look, do not overcomplicate this. Like, especially if you're a beginner, like, don't overcomplicate this. There is a space between candle 1 and candle 3, right? The wicks are not like, you see how these 3 candles, well, there's a little gap in between here as well, right? So you could use that gap, right? There's a little gap right here, little 3-minute gap, right? The gap is formed, price pushes out, and it always retraces back to this gap and respects it. Okay, and when you see this rejection happen, this is where you want to start trying to get in. Easy play. and the gap just kept being respected. I hope I took this play. I don't know what day this was on. This is on Wednesday. I don't think I did, but this is nice. This is absolutely beautiful. This is later in the day though, so it's kind of not really a good time to be trading. I wouldn't be. I probably wouldn't be taking this play because of the time. I'd be well done by now. But yeah, so you have this gap here. Like I said, you have candle 1, 2, 3. You have the space in between. The only thing I'm looking for is a retrace back into this area. Once price retrace back into this area here, okay, once price retraced back into this area and respected my gaps low, right? So you have the gap high, you have the top of the gap, you have the bottom of the gap, right? Gap high, gap low. Once I saw that price respected, or once I would have seen that price respected this gap low, I'm getting in here. Excuse me. I'm getting in here right off the rejection. Stop loss at the bottom of the gap for price to go and break these highs. Once we broke those highs, I would pretty much close out. Oh, what's going on here? I'm trying to show you guys if I can. What happened? Okay, that's going to irritate me. Anyways, like I said, I would have played this play, got in here, okay, and I would have stayed in until we broke these highs. Right? Once we broke these highs, I would have closed most of my contracts out, if not all of them. Right? And then price would have retraced back into here, and then it could make any at this point. Like, this is why I close most of my contracts out once we break a high, because price moves like this, right? Well, price when it's moving up moves like this right here. Higher highs, higher lows. Higher highs, higher lows. At any time when it makes a higher high, when it breaks a high, any time it can come back. Right? And even sometimes when it comes back, it goes all the way back. It'll sweep a higher low. It'll sweep this higher low, come all the way down here. Come all the way down here, and then start pushing back out again. Right? Like, all it's doing when it does that is sweeping these lows. Right? Because underneath all of these lows are people's orders, right? This is where everybody gets in at. So there's a lot of people just sitting here with their money sitting there while price is pushing up. So when at some point when it breaks and sweeps through these highs, it's going to come back. It's just a matter of, does it break through the lows or does it just bounce off of it? You know, so that's why, you know, I'm going to work on getting better with holding runners, but right now I just usually cut all of my profits right there because it's just like, it's going to pull back and then it'll probably will keep going. But not every time it does. It doesn't do that every time. So, you know, I usually risk a little more up front and then go ahead and close most, if not all of it out up here. And then I don't even play with this retrace. So yeah, but that's it. I mean, that's pretty simple, you know. I mean, I found that in like a matter of seconds there on the video. So that's the main thing with my strategy is the fair value gaps. And here's another one. I'm going to show you this one as well because I can remember this play. I think it was, it was in a video. And I think I just did a video the other day on this play as well. So this is an inversion of a fair value gap, right? So I play the fair value gap, the bounce off of the fair value gap, and I also play the inversion of the fair value gap, right? So you have this fair value gap here. You see price had gap down at the opening, right? Then it retraced, right? So I knew when it started retracing, if it didn't break above here, we were going to continue down. But if it broke above, I was going to be looking for a fair value gap for it to retrace into, right? I was going to be looking for a price to break above here, leave a gap in here somewhere, right? Leave a fair value gap in there somewhere. Wait for the retest. I get in there, looking for it to break these highs for price to continue up, because this gap right here is a magnet, right? These gaps are magnets. Price is going to pull back to these gaps every single time. You know what I'm saying? When it gaps down like this right here, right? So especially on the higher time frames, when you see those bigger gaps, oh yeah, the price is definitely coming back. Because I mean, it's like a $3, $4, maybe $5 gap. I mean, this is only a $1 gap right here, but that's enough for, you know, price to have to retrace. So that's why I was patient here. Even with this gap right here that was formed, right? So you have a bullish gap right here. Let's see if I can do this. Right. So right here, when I'm looking at the market at 942, I see a bullish gap being formed, which means a potential upside move, which means boom, here, retest, okay, and to keep going. Maybe even push and get equal highs, or push all the way, you know, to retest the EMA. You know, maybe even, like I said, the gap is a magnet. It may even push all the way to the top. But I stay patient here because, like I said, I knew we had to break above this in order for me to get in. I needed to break above that opening candle's high in order for me to say, okay, longs are worth the risk now, right? Like this would be too early. So with this gap being here, what I was also waiting for me to know, like, okay, we could play the downside of this though, if this gap that's created to the upside gets inverted. So that's kind of what I was waiting for there. I was waiting for a gap inversion. And as you can see, it went straight to that EMA, bounced right off of the EMA. And then what do we have here on the 3-minute chart? But then once I saw that, I came down to the 1-minute time frame. And this is where I got in at. I come down to the 1-minute time frame. I see this candle right here close below the 3-minute gap that we had marked up. Okay. Once that candle closed, I mean, I was in there. I was already in somewhere in here. Right. As a matter of fact, I'm telling you guys wrong right now, actually. It was the no, yeah, it was a 3-minute gap. It was a 3-minute gap. Yep, it was that 3-minute gap. And once we got a minute close underneath, I was in it. Right? So I was in on this candle right here. To play this play to take out these lows right here. Right? So not a long, it wasn't like a big trade. Like I wasn't in the trade very long at all, which I mean, honestly, like I have no problem with that. Like I'm 100% cool with just being in a trade for no more than 10 minutes and being out and taking my money and just, you know, like if I want to make more money, you just got to put more money on that damn account and risk a little bit more. The strategy works. It's not like it doesn't. So it's not like, so trying to trade and hold a trade like a swing trader and you're not trading like that is just stupid. So, you know, you got to understand what style of trading you're using with the certain strategy that you're using. That might be why some of you guys that are struggling with trading might be struggling. You're mixing a bunch of strategies and, you know, you're hopping from one person's strategy to another and then you're blending them together on a bunch of different assets, and it's just not mixing, and it's just causing you to lose, and you're just overlooking the market. So you need to kind of just like relax, take a step back, and just, you know, have fun with it. Make it simple. So like I said, man, I'm in off of this 1-minute break right here. I'm in with my stop loss above the gap inversion and to break these lows right here. So, and as you can see, I'll let this play out. And got to those lows, started rejecting. I was out. Like I was out right here. Right when I started seeing 1 rejection, 2 rejection, nope, get me out of there. Because I mean, it's just you just never know, bro. You never know. You never know. Price could easily come here, reject. Oh yeah, now we have a double bottom, right? Now we have a double bottom and price is going back to the top, like where this magnetic area is. Like this area is a magnet. So, but price kept pushing on through. So, it happens, bro. Like it respected this gap right here. It pushed back, respected this gap. So you can hold it and let it retrace. But if it breaks this gap, you got to go ahead and close. But if it doesn't, you're good to stay in it and let it keep running. So, but it doesn't do this all the time. The market does not move this way all the time. And like I said, there was a gap above. So, hey, that risk is on you. That's why your trading plan needs to be your trading plan. You stick to your trading plan and you don't even think about these decisions. I don't even think about them. When we get to those levels and I'm at that point, I'm closing. I'm not thinking about it because the more you sit there and think about it, the market is moving. The market is moving, especially as a scalper. So, this was another good trade. Green days are green days. Say what you want to say, but I'm in the trade for 6 minutes and my anxiety is done. For you that want to hold this and go through this, great, cool. I'm going to sit here and keep risking way more money for these shorter moves versus trying to hit home runs, especially for people that don't have a lot of money in their account, right? Like, just be careful because it don't take a whole lot to blow that account, especially in the stock options. Trading Forex is a little different. Like, you can, I don't think you lose as much as quickly as you would in the stock market. Like, you'll lose money pretty quickly in the stock market if you're, not aware of what you're doing and not patient and, all those other good things. So, so yeah, I think that's really it, right? Like, I showed you one on the fair value gap that I use and now the fair value gap inversion as well. That's pretty much it, man. I don't really do too much other than that for the most part. There's definitely a few other things. Like I have my EMAs and, the 4-hour inside bar and, looking for liquidity sweeps and things like that. But the main thing that I look for to get my entry is the fair value gap. If I don't have a fair value gap that I'm entering off of with a good stop loss, then I can't take the trade because my risk is just not worth it. Right. So, and that's a big part of this game is being able to control your risk, control your losses versus how much you're winning. If you're getting in trades and you're kind of like, fuck, I don't know where my stop loss should be at. Well, brother, you're getting ready. You're asking to cook your account. You're asking to cook your account because, you have no clue where you're going to stop at. You have nothing that's like part of your game plan where it's like, all right, I have to cut here. Like I know if price breaks through, when this candle closed, if price broke back through, I know to close. I know to close because I know that price is now going here, breaking through, it's faking me out, and it's now going to come back up here. And I don't want to be in that drawdown. Right? You got to avoid that drawdown because that's how you stay profitable, right? Like I said, look how small this red is versus look how big my green is, right? A 1 to 3, right? This is how much I lose. This is how much I win. I can lose 4, 5 times out of 10, or let's just not even say 10. Let's just say I can lose 3 times out of 5 and only win 2 times. If my trades run like this, I will still be profitable. If I just stick to my stop loss and I trade simply off of fair value gaps, right? Fair value gaps, obviously in good areas and things like that. You'll be like, they're everywhere. Like there's a gap here. Entry opportunity right there. There's a gap there. Yeah, bro. There's gap there. Stop loss at the top of the gap. Your entry is right there off the rejections. So you're probably getting in down there somewhere and boom. And see, I made a mistake though. And it's one of my rules. Here's one of my rules is once I close a trade out, I can't get back in it. Right? Because I've made the mistake of like seeing this happening, right? And then getting in like maybe like I don't know. I messed up somewhere on Friday and lost some of my profits that I had already made because I got back in it, and I got back in it in a bad spot. I think it might have been like right around here, right? I might have been getting off of this rejection or something like that. I don't know. I can't remember exactly where it was, but yeah, I got cooked. I got cooked, and it's one of my rules to not get back in a trade after I've gotten out. If you want to hold the trade, you want to stay in the trade, just stay in it. Like I said, that's my rules. You create your own rules, your own plan for how you trade. Like that's my rules, right? Because of what I've seen and what I've learned, I've learned, okay, no getting back in the trade. Every time it happens, it leads to bad stuff. So, you want bad stuff to stop happening, stop doing it. Right? So, and that's where market experience comes into play. So, anyways, I hope that helped. Like, I think I went through a good little bit there. So that's going to be it. It is Thanksgiving, and I am getting ready to go and eat with some family. This is perfect timing because it's 3:30 now. So yeah, that's another video for you guys, man. If you have any, I said, did y'all hear that? It's crazy. If you have any questions or anything like that, comments, concerns, whatever, comment below. Just let me know. I also have a free Discord link below where you can come in, free chat, and come and learn, man. I live trade as well in there for free. There's a few days I live trade for the free chat. I have a VIP chat as well. If you want to learn a lot quicker, you want to get to where, at least where I'm at within a month, I can guarantee it. Get in the VIP chat. Other than that, man, I hope everybody has a great Thanksgiving, gets to spend some time with some family, get to eat some food. I know I'm going to go get me a couple plates and a couple to-go plates. You know how it goes, man. Going to fill up. Don't be afraid to go ahead and get a good plate. You know what I'm saying? Know everybody trying to watch their figure and look right. 2025 right around the corner. But, man, go ahead and get that plate, man. Go ahead and fill up. So, because I know I am. I'm going to go ahead and eat good today. So, yeah, man, hope y'all enjoyed that. Hope that helped in some way, shape, or form. Hope that was some good little gems in there. Other than that, man, it's your boy. Y'all know the vibes, man. Peace and love. It's your boy. We out.